All right, everybody, welcome to this AMA. I think it's like what, the seventh, eighth, I don't know, but welcome. This may be one of the most important ones that we do because there is a change in trend for once, and that doesn't happen often. We started this group in August, and back then markets were neutral. Let me take you back to August. I think we started around right after the crash here. Markets were neutral. We were expecting a low. My forecasting model, which you have access to in the Discord, it may be more important than ever now to look at those forecasts because we're kind of in uncharted territory here. I don't want to get ahead of myself because I do have some comments on that too. We started here in August. Markets were sideways, and Trump won. Boom, markets shot up. This, from a cycle perspective, you can see this black line here connecting to this September 6th low. This is a 16-month low or a 320-day cycle low. I keep saying this in every lesson, but in the course I teach about a 16-month cycle in crypto. This is because when I recorded that lesson, the last 4-year cycle had a very clear 16-month cycle in it. Every other cycle, though, had a 320-day cycle. And this 4-year cycle, the one we're looking at now, also has a 320-day cycle. It's not 16 months. So we could say that there's a big cycle that's anywhere between 11 to 16 months. I'm going to go back to referring this as a 320 cycle, though, because it is clear to me that this is more accurate and that the 2019 through 2021 cycle was kind of abnormal in that sense, that it had a very long 320 cycle that measured almost exactly 16 months every time. But that's not the norm. So regardless, if you use any tool that I taught you to find the 16-month cycle is going to help you find the 320 cycle. That's how I can tell that the cycle is changing durations, because I use the exact same filter, and then it just averages the duration of the cycle, and it tells me, hey, this is shorter. It's not 16 months. It's more like 11 or 10. So that's how I know that it's changing. I'm not changing any tools. I'm not changing I'm not changing the indicators that I used to find the cycle. I just notice that using those indicators, I get a short cycle. I don't get a long 16-month wave. There's one every year now. There's been a 16-month low every year since 22. And so that's up. That wasn't the case in the 2019-2021 cycle. It was different. We had one every year, every 18 months or so, 16 months to be precise. Anyways, we started here. Market was neutral, meaning that we were undergoing a 16-month correction. We had a breakout in November, and then we had a very short rally, and now we're once again undergoing a 16-month cycle correction. That was confirmed when the 80-day cycle low VTL was crossed. So it was here, and Alex, yeah, you're here. So this is why I was concerned at the conference in Miami, is because Bitcoin was about to cross the 80-day cycle low VTL, and that always means, with a few exceptions, it means you're undergoing a at least a 160-day cycle correction, but probably, especially in this cycle, a 320 or a 16-month cycle correction, which is quite unusual because we started this cycle in September. We rallied for a couple of months, 3 months, I think. And then we topped out in mid-December. That is the shortest 320-day cycle, 16-month cycle rally we have had in this bull market. Not a good sign. I mean, that alone is not a good sign. The market is losing momentum. Whereas usually in past crypto cycles, these 320-day cycle rallies gain momentum as the market approaches the top. We had an exception in the 2019-2021 cycle where we had a very strong 16-month rally in 2020 and the Q1 21. That ended abruptly, and then we had a very short 320-day cycle rally. Guess what? That was the end of the bull market. After that short 320 rally, that was it. That was the end. We're seeing the same thing now. Pretty negative. That alone is pretty negative, because in the past, yes, when these 320 corrections coming short, that means the cycle's ending. It's not ending. I don't like that term, because when a cycle ends, ends, a new one begins. But this 4-year cycle is clearly running out of steam. This is the case in Bitcoin. What I watch personally is I watch these 80-day cycle lows. These are not to be crossed in a bull market. It's okay back here in early February. It's normal for prices to cross below the 80-day cycle low VTL. What is not at all normal, though, is for prices to cross below the 80-day cycle low. Okay, so we have the VTL and we have the low. The low is generally not crossed. In fact, this is the first bull market, 2024, first time in a crypto bull market that prices crossed below the 80-day cycle low VTL. That gave us this correction, an 8-month through and through between March and November, 8 months of a sideways chop. That's what that gave us. That started here in July. I don't want to have too many of these arrows. That started in July. That was a red flag for me. I flagged that for my subscribers at Wise. I said, not good. I mean, I've never seen this before. And by that, I mean, Bitcoin has not done this before, because I know that I could draw this the entire never happened before. That's what I pointed out in July 24. Never happened before. There is some precedent for this taking place, but it would always take place in the first year of a bull market, which I call the sideways or transition year. Typically, it's the slowest year. And yes, you may have prices crossing below the 80-day cycle low during that first year of a crypto bull market or a crypto 4-year cycle. That would be 2023 in this case. We came close from closing below that low, but we didn't. It actually held. That said, if it had crossed below, prices had crossed below the 80-day cycle low back in 2023, I would not have been overly concerned. There is precedent for this. It happened in 2015. It happened in 2019. Both of these are the first year of a crypto bull market. The bull market is slow, typically. After a bear market, it's a slow start. It's a slow grind. Then it accelerates in year 2. That's what we had in 2024. In fact, up until March of 2024, pretty normal bull market. Pretty normal. In fact, Bitcoin was trading at all-time highs. It's the first time it ever did that before the halving. So it was actually looking pretty good. The altcoins were doing well. The only red flag of sorts is that alts were not really hitting up outside of a few names. Like I had Solana. I think back then in Q1 24, it was there was a bunch of names. I think Arbitrum. I think I made some money on that. We had Polygon, Rally, we had, of course, Solana was spectacular. We had a bunch of meme coins, Avalanche, yeah, Athena. Just looking at my watch list, Rune too. So we had some altcoins doing well, but if you look at the altcoin index, not really looking too hot. But other than that, I tend not to look at altcoins much. I don't hold or trade a lot of altcoins. I tend to focus on Bitcoin. So I don't really care if the altcoins are not doing that well. I've seen cycles where Bitcoin is clearing a bull market, altcoins are in the gutter, and then because Bitcoin is so strong, the altcoins just pick right back up and start trailing Bitcoin, and then they begin to outperform Bitcoin. So I don't really care about altcoins much. They don't tell you what the market is going to do. Anyways, fast forward. So up until March, normal price action. Then we have this VTL. No, that's not the VTL. This is a great call on the part of the cycle mod. For any cycle analyst, we had this 80-day VTL that was crossed in mid-June of 24. Everybody was bullish mid-June, myself included, to the point where my trading system told me that I needed to hedge Bitcoin in full on June 15, 24. I didn't believe it, so I only hedged 60% of my portfolio, which was a big mistake. Always trust your models. So I wasn't hedged into this sell-off here. I still was not concerned until early July. Early July, we have Bitcoin crossing below the 80-day cycle low VTL. And if you remember from lesson, I don't remember, I think it's the oil lesson. I think it's lesson 5. I think I'll repeat that in lesson 7 when I talk about Bitcoin. And what I said is you can allow prices to, on a daily closing basis, cross below an 80-day cycle low. What I do is I count 3 days, 3 consecutive days from the crossing, for the first crossing of that low, in order to accept that as a breakdown of the cycle. So on July 4, Independence Day, prices are closing below the 80-day cycle low. It is a holiday in the States, so I thought, okay, I don't know. Let's wait. Let's wait a couple days. Let's use this 3 consecutive uh, 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 closing rule. And notice that we have one close below the 80-day cycle low. Then prices go even lower on July 5. That's a red flag, clearly. Then they try to rally, but they close at the previous 80-day cycle low. Not good enough. And then we have another crossover. And then we have a bunch of closes below this 80-day cycle low. It was clear at this point by July 12 that we had a very valid crossing of the 80-day cycle low, a red flag. And I was looking for some reference of when has this happened in the past? What should we expect? I couldn't find any during bull market years. I couldn't find any crossover of an 80-day cycle low. However, I did find one in 2019, which is a sideways here, and I found another one in 2015, another sideways here. Both of these years are coming right after a bear market. This is not where we're supposed to be in 2024. Still, that's the only reference I could find. And what I found in both cases is when prices cross below the 80-day cycle low, prices go nowhere for months. It doesn't necessarily mean that prices are about to crash or you're about to go into a bear market. It doesn't mean that based on the small sample that I could study. Didn't really mean that the bull market was dead, which is why I said this market is neutral. It's not going anywhere for months. That's what happened. Market did not go anywhere for months. And in fact, if you take this 80-day cycle low from July, just watch the filter here. If you're unsure about why I'm calling these 80-day cycle lows, there's an 80-day cycle low in July. And if we start from that one, notice that we have this closing low here. This July low is not really crossed. I say not really because it actually was crossed again in September, but notice that there's no follow through. Prices cross below the 80-day cycle low, and they actually hold that low. And so you don't see any follow through below the last 80-day cycle low. What you see is prices overshoot that low, but buyers come in, it holds, it makes an 80-day cycle low, and then prices rally again. So that's exactly what I thought would happen. It's just a lot of nothing, a lot of chop, a lot of sideways trading for months. That's what happened. So with that being said, we have the same thing now. So this is worrying for me for a couple of reasons. One, remember what I just said. Crossing below an 80-day cycle low during a bull market is kind of unprecedented. It happened in 2024, and I thought, okay, bad enough that it's happening now. It should not happen again. Well, it just happened again. It happened yesterday. Prices once again crossed below the 80-day cycle low, a pretty bad sign. Not only that, this looks worse than early July, because in early July, we have this crossover during a holiday, low liquidity. We trade below that low as the U.S. session started going. I don't even know if the markets were, because I think it was Friday, July 5th. I don't even know that U.S. markets were open back then, but we had a sell-off, we had follow-through, and a strong rally at the end of the trading session. There's still time for that. In fact, I would love to see that. I would love to see prices rally back up to the 90K level. Buyers come in. Right now, no buyers are coming in. When I woke up, Bitcoin was at 87 or 86. It's still there now. No buyers coming in. So this would be, if we close here at 86, this is worse than early July. It's not like early. It's almost like July 24, but worse. Still less interest from investors in getting into this market. So pretty bad. That being said, we have one crossover below this 80-day cycle low yesterday. That's bad enough. It doesn't even matter what happens now, because the scenario now is a lot of nothing for months, just like we saw in 24. And based on the forecasting model that I shared with you all, we're looking at a low. This is kind of what I'm expecting now. Kind of sideways chop. I don't think it's going to crash. I don't think it's the end of the bull market. But it's clear to me that just like the market suggested, because the forecasting model, I don't know if you noticed, it calls for a high likelihood for a significant low in April. There's a chance for a high too. And the seasonality of Bitcoin is that it tends to be pretty strong in Q1. So I thought, I don't think it's going to make a low in April. I think it's going to make a high in April, probably rallies into April, and then it sells off into October. That's classic Bitcoin seasonality. Now it's clear now that the forecasting model was kind of more accurate than I thought in calling for a low in April, because that is the my framework now. Is I'm expecting a rally this a low and a rally this week. We are quite oversold. Not if you look at Bitcoin, but if you look at other names, quite oversold. Solana, for example, has been selling off for over 2 months. So yeah, we should expect an 80-day cycle low anytime now. But this low will not take us to new highs. This is the all-time high on a closing basis on Bitcoin. There. Oh, I froze. Sorry, the duration of 320 cycle 361. Oh, okay. Yeah, my connection here in Colombia is not the best. I apologize for that. Anyways, I hope you can follow. You're following what I'm saying. I think you are, because Perry just shared the forecast, so you're following along. That's good. Anyways, let me keep going. I don't know where I was at. Anyways, okay, so we have this crossover of the 80-day cycle low. Expecting a rally here. I don't know if you look at the file that Perry shared here, which is awesome job, by the way. I use it all the time. I don't even use my own thing anymore, Perry. I just look at your image, and we have a low for now. It's a likelihood for a top, and I will say, sometimes when prices are falling and there's a forecast for a top, I have seen this occasionally where prices just accelerate to the downside. So there's a chance this forecast for a high on Feb 27, I think it was, or 26. We're in the orb for that now. So it could be now, it could be tomorrow, Friday, it could be Sunday, it could be Monday next week. So we're in the time band for that low to take place. If it's a high, because it shows a higher likelihood for a top, then it could be just a crash. It could be the prices just crash. Not my base case, again, simply because markets are too oversold. So I'm expecting a low. I think that what I'm saying, I guess, is that if you notice that at late February forecast, it's a higher likelihood of a high, but it also shows a likelihood for a low. And given where prices are now, I think it's going to be a low. It's going to be an 80-day cycle low, which is why I drew these arrows here. That's what I'm expecting. It rallies. I think if Bitcoin goes back to 100K, a ton of sellers are going to come in, myself included. We're going to dump all our Bitcoin. I already have stolds, just full disclosure. I have no Bitcoin currently. What I do have is hedged, and it was hedged at 95K, so I don't really care if it keeps going. That allows me to be objective in my analysis. I have no exposure to this market. So about 100K is what I'm thinking might happen. And then it sells off again. And just watch this picture. That's what I'm expecting. Notice that in 2024, in this 320 correction from 24, we have lower lows. Actually, there's a double bottom here between August and September. But prices did kind of tend to overshoot the previous 80-day cycle low. August was particularly dramatic, simply because there was a big macro event taking place at the time with the yen carry trade unwinding. There was a liquidity vacuum that formed in the first week of August. That's what brought prices so low. Generally, though, what I did notice in this 24 correction is that each new 80-day cycle low, or what looked like a new 80-day cycle low, would overshoot the previous 80-day cycle low on a daily closing basis and then rally from there. I'm expecting the same thing now. It could be a rally to late March is what I'm expecting. Mid to late March. Again, just looking at the forecast that I shared with you. And then a low in April. That low should be a 320-day cycle low, which means after that, we should have a rally. And if Bitcoin remains above 80K during this correction, I think it goes for a new all-time high. I'll be honest. I'm just being honest here. I think it goes for a new all-time high. How high, though? Well, initially, I said I expected Bitcoin to go to 150K. That was my expectation going into this bull market. The reason is I noticed that the cycles were getting weaker. That's always been the case, but in the last cycle, things got considerably weaker. And in this cycle, even more so. I mean, these bull markets are not what they used to be. And I believe that's a feature from now on. Crypto's just not what it used to be. It's gotten bigger, and different participants are the ones who push prices around. It's just it's a different animal now. The cycles haven't changed. They never do. But the amplitude of the cycle, the amount that prices go up and down within that cycle, that has changed materially. It's very different now. So I'm expecting this rally after April. I believe the forecasting model has a high either for June or August. If I had to guess, and I'm guessing, I'm doing a lot of guessing here because we don't have this 320 low yet. So it's hard to speculate on when the 320 rally from the next cycle ends if we don't know when it begins. Let's assume, though, it begins in April. So prices begin to rally strongly in April. I would expect that to end in June, though. I believe there is a forecast for a significant high or a low. I know there's a lot of activity in April, June, and October, if I remember correctly. So if prices fall into April, they form a 320 low in April, and they rally from there. I would expect that rally to go on for a few months, couple months tops. By the time we get to June, July, it's over. It is over. That will be the end of the bull market. Just in case I'm not being clear enough, that will be the end and the final 4-year cycle top. I don't think this is a 4-year cycle top because prices have been sideways for too long. Bitcoin hit 100K for the first time on December 5th. I don't know if you guys remember, that was a key date on the forecasting model. That's the first time it hit 100K. Then it formed this low on December 5th that was tested multiple times, and every single time that low at 92K held until yesterday. And look how far below we are now. So yeah, the cycle is clearly changing. So the outlook on Bitcoin is we're going nowhere for months, possibly until April. And I want to be clear, even if we make a low in April, it's going to be a very slow grind to get the new 320 cycle going, just like what we saw here. Technically, the low on a daily closing basis is on September 6th. It wasn't until November, so that's 2 months that we had a breakout. Prices were very slow to get going. If you go to the previous 320 cycle, same thing. We have a low also in September. Prices are slow to get going. It was a little fast in 24 because around October, we started getting these confirmations that the SEC was going to approve the Bitcoin ETFs. So we were off to the races by October. But it was still a month. We still had to wait a month. I had to guess this time maybe quite similar, where we have a low in April, let's say mid-April. Then between mid-April and mid-May, we don't do anything. We don't do much. But you can clearly see that Bitcoin is starting to march higher again. Maybe it recaptures the 90K level. Maybe it goes to 95. It tests 92 again and it holds. That's the type of stuff you want to see. And then between May and mid to late June, we have an explosive rally. It takes us to 120 at the most. I don't think it's going to go beyond that. I don't think it goes to 150. Maybe I'm wrong. Maybe it goes into October. There's a chance it goes into October, 150. That's not my base case. This market is very weak. Why am I saying that? Okay, before I end this monologue, let's look at Solana and Ethereum. Let's look at Ethereum first. So black line, 16-month VTL. This VTL, interestingly, is not always crossed. What I mean by that is, in previous bull markets, this 16-month VTL, you can see that it connects the 16-month low from October 23 with the 16-month low from September 24. So this is a very, very long-term VTL. Ethereum got very close to closing the previous VTL, the previous 320 VTL, which was right here. It was, let me see. It was there. And it got close. It was at 2100, I think it was. There we go. It's somewhere around this area. So Alex is saying, do we skip the end of the bull market all season this time around? Alex, what I can say is that there's been no all season and there's no time for all season. So even though it may happen again, but let me get to that in a minute. I think it may be something similar to what we saw after Trump won, where we have a mini alt season. Prices pick up again and alts do well for a couple of months and then it ends. Whereas previous alt seasons would last for 6 months. I don't think you're going to see that. Anyways, back to Ethereum. got close to the 16-month VTL here. It was about 2000. That was in late 24. And then we describe another 320-day cycle low, and now prices are below it. On the computer model that I have, which is based on the cycle model that I teach you, crossing below the 60-month VTL is a bear market signal. It's a bear market signal. The trend is bearish at that point. It's not neutral, it's not bullish, it is bearish. It is what I use, is one of the things that I used to call for the start of a bear market. So technically, Ethereum could be starting a bear market. Now, once prices cross below the 60-month VTL, they tend to rally strongly back above the VTL. That does not negate the signal. The signal is valid if you have 3 consecutive closes below this VTL. We're in close 2 now. We had close 1 was yesterday. Close 2 is likely going to be today, unless it's a strong rally into the end of the trading session. And then we have another day to go. Once those 3 consecutive crosses are confirmed, then Ethereum, on the computer model that I use, is bearish. Its trend is bearish, which doesn't mean it can't rally. It means it will make a lower high. It also means the 4-year top is likely in. It was 4,000. It was here in March 24, and it had a double top on December 24. So that's the 4-year cycle high. That's what it means. It doesn't mean it can't rally. It doesn't even mean it can't go to like 3,500. What it means is I'll be shocked if it goes above 4K after it crosses this VTL. Now, in the case of Ethereum, I don't want to get super technical here, but notice that this whole rally and sell-off, just watch the filter here. This whole thing took place inside of a single 80-day cycle. So we have an 80-day cycle that starts in September, strong rally into mid-December, strong sell-off into, call it, early March. Sometimes when that happens, my model doesn't actually shift the trend to bearish. It actually waits for prices to cross below the actual 320-day cycle low in order to say, okay, yeah, that's a bearish trend. That's just like a safety measure. There's a very small chance what we're seeing on Ethereum is a head fake, and its trend isn't really bearish. So the level that I would watch is 2,200. Now I will say that's just it's just out of an abundance of caution. I don't want my model to turn bearish if I'm not absolutely convinced that it is bearish. So in Ethereum's case, crossing below this VTL means there's a 90% chance it's in a bear market. I don't want to say bear market because I don't think prices are about to tumble and Ethereum is about to go to 1,000. What this likely means is that the high is in. The 4-year top is in. 4,000, double top between March and December 2024. That's it for ETH. If you want to trade it, go ahead. I haven't actually sold any ETH. I have a very small position, but I'm waiting for a rally. I have a lot of calls at 3,000, and I'm going to unload all of my Ethereum at 3,000. And I'm going to continue to do that strategy simply because, that's how I want to trade it. It's not a long-term position. I added it recently, and I made money on it. So I keep trading it. But I am here flagging this crossover the VTL, which in Ethereum's case, 90% chance it's in that 4-year cycle high is in. I think that sometimes when I say bear market, people think, okay, it's about to crash. No, it's not about to crash. There's a low that is extremely overdue here. Ethereum topped out on December 5th. I think the mid-December forecast that we had last year produced a double top in this case for Ethereum. Look at this chart. It's extremely oversold. It's very unlikely that after crossing this VTL, it's just going to keep going. I will be shocked if I see that. There seems to be buyers every time it goes between 2,200 and 2,400 anyways. So I'm expecting a rally in Ethereum right now, but don't expect it to go above 4K. This is not financial advice. Personally, I will use that rally to sell. I will unload all of my ETH, go to cash, if it recaptures the 3K level. That's my price. I like 3K. It's a round number, and I think other people may be tempted to sell at 3K also. It may not even get there. So by the time it goes to 3K, boom, I'm out. I'm in cash. And because even though it's not technically a bear market according to my computer model yet, we're extremely close. And it's just a matter of time. By the way, it wouldn't call, the model would not call for a bear market of this crossover. I already checked the model, so it doesn't, because it took place under a single, this whole rally and sell-off took place under a single 80-day cycle. However, if it crosses below it again, it will call for a bear market. So that's what I think happens here. Ethereum rallies, into March, mid-March, call it. I think there's a forecast for a top in March. So it seems like the outlook is a rally into March, a sell-off into April, a significant bottom in April. But the top is in, probably, for Ethereum. And then we have Solana, another one of the outperformers of this bull market. This one has already turned bearish. It turned bearish here. I think it was, yeah, it was on February 20th. So on February 20th, it turned bearish. The thing that saved Ethereum is that the rally and sell-off that took prices below the VTL took place under a single 80-day cycle. That's not the case in Solana. We have two 80-day cycles. We have one completed here, mid-December, and then we have another 80-day cycle, and prices are now below. So we can say this is a bear market. Now Solana is bearish. I hold no Solana. What I have was hedged at 170K, which is the where the bear market indicator was, the 16-month VTL. No exposure here. I do still have JLP for the same reason. Just sharing what I'm doing, just because maybe it helps you make a decision, or maybe it helps you understand where I'm at with these markets. I'm expecting a strong rally in Solana also. The fact that it's bearish means the high is in. It was probably 300. Probably, anything can happen. But I think a rally to the 200 level is, not out of the realm of possibility. And I want to sell all of my JLP when it gets there. JLP is like an index fund that holds a lot of Solana, but it pays fees. So I think of it as a way of owning a hedged version of Solana. So I don't want to unload what I have yet, because it feels like selling exactly at the bottom. So I'm waiting for a rally. I'm hedging, waiting for a rally, and then I will unload. Because it makes a big difference if you sell at 140 versus 200 on this asset. How much higher is it? Like 50% higher. So it makes a difference. And so again, the fact that we're trading below this VTL means that the trend has shifted. The 4-year cycle top for Solana likely took place on January 19th. You can see that this VTL connects the start of Solana's rally back in October 23 to this significant 16-month low that took place in September. We draw that trend line, and then prices cross below it. I don't know if this picture helps you see what I'm talking about. This is not normal, guys. As the 4-year cycle rally unfolds, prices accelerate. They tend to go more and more exponential. That's why usually we use log charts to look at crypto's long-term trends. Now look at this picture here. It clearly broke. It was accelerating here in the first rally. It tried to go for a second rally. It failed. And now we're testing, we're very close from the previous 320-day cycle low. This is not at all how a crypto bull market looks like. In Solana's case, it is very clear. This thing is over. Now, again, altcoins are weird. Altcoins can do all sorts of things. So maybe, I think Bitcoin still has a chance for an all-time high. And sure, maybe Solana just rallies against all odds and it goes like that. It makes a low. And man, boom, it goes to a new all-time high. It could happen simply because Solana is just not a market leader. Clearly not a market leader. So it will follow Bitcoin. If Bitcoin is more bullish than I anticipated, then there is a chance for alts to do well. I would be shocked if Ethereum does anything at all. I don't think it will. Too much negativity around Ethereum anyways. Solana, I'm not sure it can't rally to new highs. I think maybe it could if the bull market unexpectedly goes into October. Then I think Solana may at least retest 300. Maybe it goes above. I don't know. But that's not what the cycles are saying right now. I just want to drive that point home. The cycles are not bullish. They're not pointing to new highs in this market, but it's always a possibility. Just, I don't want to rule that out. Anyways, before I end this monologue, let's go back to Bitcoin. Where's the 60-month VTL? It's right here, very much below the market. It's at 70K or so. And so this is what gives me hope still. Not a lot of hope, not for the altcoins at least, but this picture here tells me that we should not rule out new highs. We should not rule them out. It's still possible. However, this can change. I'm gonna keep you guys updated on every AMA and also on the Discord. If we go to like 75K, if we test this VTL, even if we don't cross below it, forget it. This thing is over. The 4-year cycle high was right here. This double top here. Very unusual price action, but markets are markets. They can do anything. So I'm watching Bitcoin here. I think this is the key because Bitcoin has so far held pretty strongly. I'm not surprised. When you cross the 80-day cycle low VTL, it's kind of implied that you're going to at least retest the last 80-day cycle low. And if recent history was any indication, there was a very real chance we were going to cross below it. I think a couple AMAs ago, I think Brett was here and we discussed targets for this correction. And we said, 80 to 85K. I think we both agreed on that 80 to 85K. We're seeing that now. So nothing that's been happening on Bitcoin has been totally unexpected. What's happening on the altcoins is very unexpected, though. So it's telling us something. This has been a Bitcoin cycle through and through. I get that. But typically, altcoins heat up at some point. And right now, what the altcoins are saying is, hey, listen, we may have a 4-year cycle high already in place. Not on Bitcoin, but I think Bitcoin's 4-year cycle top is going to come in very quickly here. I think it's over the next 4 months, we're going to see the 4-year top on Bitcoin. Also, with that being said, I am done. Let's see those questions. Okay, Alex already went through that. All season has been replaced by meme season, and I'm only half joking. Agreed, Chris. Alex, Chris, guys, I mean, what I use for the all season indicator is this. I love this one. This thing is the market cap of alts excluding ETH and BTC, and I subtract the market cap of stablecoins, or at least the 2 large stablecoins, and I divide that over the price of Bitcoin. I think it's a market cap of Bitcoin, but I'm not sure if it's the price or market cap. It doesn't really change much. And what you can see here is that we had, post-Trump victory, we had altcoin season. It lasted 3 weeks or something like that. It's like a month, 4 weeks. And then we had another one. I don't remember when, but we had another mini altcoin season. There you go here. Late Q4 23, another one of these mini altcoin seasons. So Alex, to answer your question, I didn't want to get too deep into that. I think we might see the same thing. We might see the altcoin index rally again. Sure, we can see that. And what that's going to look like is altcoins doing really well while Bitcoin rallies. Is it going to be alt season though? I mean, look at this is previous alt seasons. This is the one from 21, which is not even that good. It started in January 21. It ends, it ends in May. That's a good 5 months, give or take. Interesting. Yeah, it's about 5 months. There's a double top there into September 21. So 5-6 months of alt season. That's what we're used to seeing. That's what everybody's used to seeing. But we're not seeing that this time around. And this one, total 2, this uses Ethereum to look. And so if I take you to the previous alt season, well, it's not here because I'm excluding the market cap of alts. So if you look at total 2, let me just bring it up here real quick. So the alt season from 26, and I think people love alt season not from the last one from 21, but from the 2017 cycle. That one was basically most of the bull market was alt season. So as long as the bull market was going, alts were doing much better than Bitcoin. Now I've studied these charts a lot because at my company, they love to sell this alt season product, which I've told them to stop because we don't have alt season. So we need to stop selling that. But I think people love alt season from that cycle. They remember 2017, and some of them traded 21, so they know what happened in 17. They traded in 21, and they want the same now in 25 or 24. And it's just not happening. And I don't blame anyone. I've never been a fan of trading altcoins because I did trade in 17 and I did not do well. I lost all my money or most of my money on alts. And I was done with them forever after that. But I was recently with a couple of friends. Alex, you were there at this Real Vision conference. High net worth individuals, VIP breakfast, whatever. Everybody was hunting for the next shitcoin. Everybody, and these are like very well off individuals. Like, these are professional investors in many cases. They're hunting for shitcoins. Nobody wants to touch. Nobody owned Bitcoin. So I don't blame the market or market participants or anybody for trying to find the next Bitcoin, quote unquote. But the thing is, there is no next Bitcoin. Bitcoin's Bitcoin. And I think from a risk adjusted perspective, the best chance you have at making money in crypto is to trade the big names. Don't try to hunt for some shitcoin. I did actually get a few recommendations at this conference. A couple of them did okay. But yeah, whatever. I mean, it's just not worth it. I mean, we don't have the type of altcoin market that we used to have. That has changed completely. So long story short, on alt season, yeah, it's not gonna be like it used to anymore. I don't think so. I don't think so. I think it's over. I think the market has gotten a lot smarter when it comes to alts, and the market or market participants recognize that most alts are shit. This is what some of us, I think, Chris, you learned that too in 2017. I learned that lesson in 17. Most alts are shit. When I got my job at Wise, my first job was to basically read white papers and grade crypto projects. And I read hundreds of these white papers. And eventually I realized most of this stuff is garbage. Once I understood the technology enough and the use cases enough, I began to realize, like I was like a altcoin maxi going before I got my job at Wise, but then after I got the job, I turned completely because I realized most of this market is total garbage, and it's still the case to this day. In fact, to be honest, alts now are much better than they were back in 2017, and yet they don't rally nearly as strongly. I mean, right now in 17, we have Solana, we have, I don't know, BNB is okay, Tron is good, we have stable coins, we have actual applications. I love Athena as an app, but the token is shit. I mean, you should not own this. Maybe you want to trade it, but owning the thing, no, not really. So
I have a way of articulating what you just said.
there you go. Go ahead.
You said you've read hundreds of white papers. That's what we used to do, right?
Yeah, yeah,
And like with any field, it starts off being a total mystery, but at a certain point, something crystallizes, which is like the fundamental pattern underlying the thing you're learning. So, and that happened to me reading enough white papers. You sort of cross a threshold where you get the basic recipe. Every blockchain has a consensus mechanism, it has these key components. And then once you've got that, every white paper you read after that, you see how marginal the difference is between one altcoin and the next. I am still shocked that new layer ones are being launched. I'm like,
me too.
that's so old news. Like, I would not even dream of doing that now. We're so past layer ones launching. Like, who's investing in these things? And it's going to be so hard for them to get traction now as a layer one. That ship has sailed, if you ask me. You're much better off on the app level now. That's where it's going to be played out. It's like people are still trying to invent another internet. It's like it's gone. It's gone, right? Build a business on the internet, not another internet. You know what I'm saying? That kind of
Yeah,
ship
I agree.
sailed after Ethereum, to be honest. But whatever.
I agree. I mean, I think uh, my perspective on this is that I like some layer. I do not pay attention to layer ones unless I see usage. For example, I got turned on. I disregarded Solana until I saw headlines um, that they were doing more volume than some Solana dexes had more volume than Ethereum dexes, and I thought, oh, that's unusual. And then I thought maybe it's a one-off. So I decided to look into it, and I saw a ton of activity on the Solana blockchain. So I thought, okay, this is good. I'm gonna add it to my list of things that I own. I never had more than 10% of my net worth or my crypto holdings in Solana, but I had some. Same
Right.
for Ethereum. Sui has a ton of activity right now, so I own some Sui. I do think there's room for some layer ones, but I wait until they're proven. I want to see activity. I don't just buy a layer one because it's got all the bells and whistles. Yeah, they used to have all the HBAR, Hedera Hashgraph
Mm.
was superb in the
Yeah,
way it was
absolutely.
built back in 18. I think it still has no activity. so like, who cares? It doesn't matter. That's
Well, so that's
everything.
another point, right? Yes, you
Yeah,
can have the 5 ingredients we talked about, right, for a blockchain, but that's not going to make the difference. What made the difference with Solana was, well, basically ease of use and marketing,
yeah,
which has actually got nothing to do with the layer one. Anyone could have done that, right? It was basically costless. The wallets were easy, and they promoted it. Hello, that's basically what
yeah.
the success story is. And everyone's like technical this and technical that. Like, no, 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 no. The business side of it is where the game's played out. Once your product is good enough, which is all you need in business, is a good enough product. The rest of it's all marketing, right?
True, true.
So
Agreed.
yeah, that took us a long time to learn that through like multiple cycles and observing the pattern over and over again. But that is the case.
That is
The
the
way
case.
the way
And
I would have
yeah,
had it go though, I would have preferred it. I'm not God, but I would have preferred it if um, all the scaling were done on Ethereum layer twos. I think that's where the innovation should have happened. Bitcoin solved its use case, Ethereum solved its use case, and instead of copying Ethereum, we should have evolved Ethereum to layer twos, layer threes, and layer fours. That would have skyrocketed the innovation in a vertical direction rather than a horizontal, what do you call that? A dilution of capital and investment across multiple competing layer ones.
I agree, but I think it's a case of it's kind of like
It's a
it's
moot point. I
capitalism
know.
gone wrong,
I
right?
know.
You
It's,
need a
it's totally a
token.
moot point anyway. Yeah.
Yeah, and people want a token. Like the people who are behind something like a Solana, they want to get rich off of it, and they need a token.
It's a good
So
point.
that's the sad
The
reality.
incentives are such that if you look at the return on energy and even the return on capital for building a business versus a token, it just doesn't add up, right? It's just too easy to go the token route, which is why people weren't building apps on Ethereum. They'd much rather build an app chain like Ape Chain, for example, right? Stuff like that,
Yeah,
because the payday is so enormous if it works,
yeah.
and the effort to compete with other apps is so high. The incentives just aren't aligned, are they? Like you said, capitalism gone mental.
Yeah, I mean, I think Arbitrum is a great example of because you
I,
have this
I think
great layer
Arbitrum is
two.
so good though as a network.
Exact, but that's my
It's
point.
so
So
good.
Arbitrum is a great product. It is a great layer two. It doesn't need a token, and to this day, I don't know what the token is for, which is why it launched, and it's been nonstop way down, well,
It's
with
just
some
another
exceptions.
governance token for voting on protocol
Right, but
changes.
voting on what though? I mean, this is why prices are performing horribly because there's no reason to own this thing. And this you can say the
No,
same thing about most tokens. I think these guys wanted funding. They wanted a token and they launched it and they just came up with a crappy excuse why it should exist.
yeah, but they had a lot of
And that's the
funding though
problem with layer
in the
twos.
first place. Yeah, but you could always do with more funding.
Yeah, I don't know. I mean, that's what I'm seeing with a lot of layer two tokens.
Hey,
It's just that
they did make a smart decision though, right? One of the things that Arbitrum did with a portion of their tokens is they subsidized transaction fees.
they do,
Yeah,
but
like
transaction fees are so low.
exactly. Well, they're crushing them even further. A lot of transactions I do on my Avocado wallet, it shows you the little 80% bonus that's paid by Arbitrum Treasury, and then you pay the other 20%. It still has
Oh,
been like
that's
2 cents, but it's 2 cents instead of 10 cents type thing. I thought it was
all
brilliant
right.
to incentivize usage. I guess that happened before. No, Solana was around. They may have done that in response to cheaper transaction blockchains like Solana that are fractions of a penny. But like to me, 2 cents, a fraction of a cent, makes no difference, right? It's
Yeah, it
effectively
makes no
free,
difference.
right?
Yeah, it's effectively free. Yeah,
When you're used to paying percentages in traditional markets, right,
yeah,
to percentage fees rather than I don't care about 2 cents.
yeah, yeah. And let's see. Market seems to be okay. Perry, the questions. Let's go with Perry's
Go
questions.
for it.
Okay, isn't all crypto somewhat now correlated to tech stock performance? So can you comment for just a minute or two on the bigger correlation? Would that be the Nasdaq or the S&P? So I'm gonna go with that one, Perry. First, yes, sadly, crypto is connected to the tech sector. So this is what I use to assess the Nasdaq here. I think I share this with Marco. I don't think Marco is with us today, but It looks like the Nasdaq has maybe topped out, but I'm not sure. I don't know if you guys remember, but back in mid-December, when I shared the forecast with everyone, and I said, okay, forecasts are up, and the we had a cycle forecast for a top mid-December, which when I ran the forecast for 25, that mid-December forecast was upgraded to a major high. And on that same day, Martin Armstrong said, watch out, mid-December looks like a significant top. And I only heard him say that once in many years. I think he must have said it a few more times. He doesn't do it often, though. The time before that he just flashed a warning out of the blue, it was right before the COVID crash in February of 2020. And he said,
I
it
remember
looks
that.
like it looks like it's topping out. So, I mean, look at the stock market. The stock market clearly has a high in mid-December, and now we're crossing below this 20-week cycle VTL, which if you remember from lesson, I don't remember, I think it's lesson 4, that's significant. Now, it's not enough to say the NASDAQ is bearish yet. For that, we need a second consecutive VTL crossover, which means we're months away from at least my model or my version of cycles flagging a bear market. But a pause in the stock market tends to be, a crash in crypto. So stocks are paused, crypto is not doing well at all. And yes, it's highly correlated. I think I just answered that question, Perry. You can see here this December 17 top that was flagged on my forecasts for 24 was upgraded to a major high in late 24. And if you look at Bitcoin, it is the high on Bitcoin. So yeah, big correlation, and it's a Nasdaq to answer that question. And the stock market is not looking well. It's I didn't think we would go into this, but stock market is not doing well. On the work that I do on the stock market, I don't tend to trade stocks much, but I always watch them because they are like the global. U.S. stock market to me is like a global benchmark for the world economy. I mean,
You take the
the
temperature.
U.S. is the epicenter of the world economy. So whatever the U.S. stock market is doing tells you about what's happening in the world, and it's topping out. Clearly topping out. We're crossing below the 20-week cycle VTL. We were close to a bear market back in December, but we avoided that because we established a higher 20-week cycle low. But now we're crossing below again. We have a double top. Mid-December is a high. This is the date that was upgraded on the forecasting model. It is also the date that Martin Armstrong highlighted as significant. And yeah, stocks are not looking good either.
Yeah, but hold on,
also,
like,
Marty,
this is
sorry,
speculative, and it sort of leads on to the next question, which is, says, haven't you previously stated that global liquidity, global money printing is the biggest driver, i.e., the US and China? What does that currently look like? Well, so what came to my
doesn't
mind
look good.
there was this is like a two-sided thing. So the first side is thinking back to Trump's last presidency. There seems to be a consensus that Trump seems to view the health of the economy as the health of the stock market, and so that he'll be looking at the markets, and if it looks weak, then he'll respond to that with some kind of market pumping action. So that's on one side of the ledger. On the other side of the ledger, one of the things that I thought when I was looking at Trump's approach to the US presidency and the Department of Government Efficiency, and specifically the principle of reducing government debt. Now that got my attention because hasn't almost like our entire thesis for maybe decades, maybe a couple of decades since the 2008 financial crisis, been that the government debt is going to continue to expand, and therefore the money supply is going to expand, and that's why liquidity is going to expand, and that's why risk assets are going to continue to grow. Now, that sounds like that might have flipped. If let's just pretend that Trump can stop the expansion of government debt and reduce it, that trade turns around.
I have some thoughts on that, but they're slightly different. One, I don't think it can stop. I don't think there's a single case. No, there's no case in history where that happened. There's one, Chris, you might like this, because according to Martin Armstrong, who has done extensive work on this, and guys, I'm going to meet with Martin. I'm going to spend 3 days with him at his place, 3 straight days of just picking his brain in a couple of weeks. So I will share my thoughts after that. But Marty has done extensive work on government debt and over indebtedness, the cycle of debt, all that stuff. He said there's only one case of a major government paying off their debt. That was the UK. The UK, I think, in the 19th century, managed to pay off their debt, bring down the deficit aggressively, and they successfully did this after a lot of austerity. Now, what that did is it crashed the UK's and the global economy. Marty's prediction is these efforts might succeed, but there's going to be a lot of pain to get there. Think about it this way. Doge closed USAID, right? And they found a lot of fraud. Now, what is all this fraud? It's waste, fraud, and abuse. I love that term. It's waste, fraud, and abuse at the government level. It's grift. It's insiders stealing money from the taxpayer, essentially.
Parasites.
The problem is they're not really stealing it from the taxpayer. They're just printing the money. The government prints this money. The money doesn't exist.
Yeah, that's the same though, because it's inflation, which is wealth confiscation.
Not only that, Chris, it's spending. It actually stimulates this grift.
Well, yeah, because
this corruption
is an economic actor.
Yeah, so it stimulates the economy. It actually, if you take that away, which is, you might argue on ethical grounds, and I do, I think it's a great thing, but it's going to sink the world economy. Because all of that money, that free money that was flowing from the top at the US government.
You're saying Doge might sink the world economy?
Yes.
Okay.
All of these cutting efforts
because it's
will
deflationary
sink.
in a way.
It's extremely deflationary. Now, again, I don't agree that these bureaucrats and these NGOs should be flush with all this cash. No, that should be cut off. This is a painful process that I cheer. I am cheering for the wrecking ball, like everybody else, I think, like most people. It's quite a show to watch too, but it will sink the global economy. It will sink it. Now, I don't know. I don't think Trump realizes
it only shrink it. I don't think he knows that. There was a massive bubble.
Yeah, it was decades of waste and abuse.
I know, but we call them correction in markets because if something gets overvalued, I never used to like the word correction because it implies the price was wrong and the price is everyone. But correction means like return to fair value, say. Right. So
again, I agree, but I don't know if enough people appreciate how painful that is. As you begin to cut,
that's a different story. Absolutely not. They won't get it.
Yeah,
they will not get it.
Okay, and markets will react accordingly. They will react by going into a. Okay, so I think the next 4-year cycle high. This is something to discuss later, probably. As we head deeper into 25, but I think we're heading for a big crisis now with Trump in office doing all these cuts.
Sure.
He's also taking a chainsaw to like global trade with all these tariffs.
Yeah, that's
and so that's another
affecting
one.
The velocity of money, right? He's putting friction in the economy, and that's bad, right? Money doesn't like friction.
Not only that, but the way the global economy is set up is basically a lot of dollars flow from the US into the rest of the world. That stimulates the globe. So if the US restricts trade is not the main vehicle to move dollars around the world, but it is a vehicle. So if you start to put barriers on trade, those are less dollars, less liquidity that's flowing across the globe. That's going to be bad for liquidity. It's going to be bad for liquidity. It's going to be bad for
because
crypto.
Financial markets are priced in dollars, right?
Not only that, I am concerned about. I'm also concerned about the fact that internally in the States, tariffs on the margin, like everything else being equal, tariffs are inflationary. It's true. I think the media has been pounding on that table forever. So they're actually, tariffs are designed to make prices go up because it's a protectionist policy. What you want to do is say, okay, the Chinese are making goods cheaper than us. That's why they're competing with our own industry. Let's make their goods artificially more expensive so that we can compete. So they're designed to make prices go up. They're designed to stimulate industry, local industry, by making foreign exports more expensive. This is by design. Now, you can argue all you want. The Chinese are subsidizing their industry with cheap labor and whatever else. True, but on the margin, all else being equal, if the US puts a 20% tariffs on all Chinese imports, there's a period of a few years where you're not able to replace that industry or those goods. So you're still buying them from the Chinese, and they're more expensive, and the Fed is not going to cut into this. I don't think they're going to cut at all. So the flow of dollars is more restricted because global trade is down. They're also more restricted because the Fed is concerned about inflation, and they're keeping rates way higher than everybody else. Like they're way high. Everybody else is cutting. the U.S. is in a strong position to maintain um, higher rates. However, I think what Trump and the Fed, all these people, I don't know if they appreciate foreigners own far more dollar assets. I mean, assets in the United States than they have debt. So, and everybody has
Mm.
dollar debts. So, if the flow of goods of dollars across the globe begins to get more and more restricted, there is a point where foreigners begin to sell US stocks and bonds. That's when the Fed reacts. But you only get there after a major crisis. So we're heading there. And I think part of the reason crypto is so weak and this cycle is so different is because what's happening with Trump and Elon and those, that is different. Something is, the US policy has completely flipped. And I think it's a positive over the long run. It's a new process of cleansing that's starting. I think it's a good thing. But for us here in markets, I think we need to brace for some pain. We're all going to feel this pain.
What do you call it?
But the
A
markets are feeling it.
bifurcation point. Do you know what I mean
Yeah,
by that?
yeah. I think so. It's like a change in
Like
direction. Like it's going in a different direction.
when one system like rises and falls, and you convert to a new system, the bifurcation point is the point of implosion, and that's where chaos ensues. It's the metamorphosis, the butterfly thing, right? Where the caterpillar is no longer a caterpillar, not a butterfly. In the cocoon, it's neither, it's just a goop. That's the bifurcation point where the caterpillar evolves, and that's the point of the whole thing. When a system gets to its natural evolutionary limit, right, it needs to evolve to a higher order, it first has to implode like a butterfly in order to emerge as a. But when you're in the cocoon, it's just a mess. It's just an absolute mess while everything's reconfigured.
Yeah.
And
Well,
that's
that's
probably what we're going through.
it's pretty much the process we're in now. So I think Perry, you're saying bigger picture, global investment already losing interest in crypto. Looking back to gold, especially with BRICS, gold backed, still gaining global traction. 10 countries. Perry, I think the reason gold is gaining so much traction has a lot to do with, again, U.S. foreign policy of restricting the flow of dollars. It started with Biden. Not enough people are paying attention to the fact that the Biden administration confiscated uh, Russia's dollar assets. That was a
Mm,
big mistake. There were
I
other ways
know.
to punish them, but seizing their money, like canceling the money that they have, is not a good look. This is when gold's starting to do well. Now with Trump, same threats. Also, he wants to restrict the flow of dollars. We're in a, since 22, we've been in a very interesting situation where the United States domestically is flush with cash, high inflation, high prices everywhere. Outside of the United States, there's a dollar shortage. So there's an
Still.
abundance of dollars within the
Okay.
states, and there's a dollar shortage outside of the states. And
Mhm.
so the U.S. is prioritizing their own domestic issues at the expense of the rest of the world. Now, the problem is the US is a global empire. And so if you start hurting your trading partners, your allies, if you just want to stimulate domestic industry at the expense of, Europe, then China, India, these guys start looking for an alternative. They say, okay, this monetary system is not really working for us. These guys are just going to do the Americans. They're just going to do whatever is good for them. They don't care about us, and they start looking for alternatives. And gold, I believe, is doing well because you need a neutral reserve currency. The rest of the world is looking for that, a neutral reserve asset, and Bitcoin's just not there yet. It's not big enough. Gold
Yes.
with this rally is at $15 trillion, I believe. And so I don't know how gold makes it back into the monetary system, but it's big enough that you could. Whereas Bitcoin is a couple $1 trillion is not big enough. And so gold is making that its way back into the monetary system out of a need from the rest of the world, not really the US, but the rest of the world has a need for a neutral reserve asset. It's being pushed by China and Russia, obviously, because they're in the crosshairs of US foreign policy. But I think countries like the Arabs, like Saudi Arabia, India, Brazil, all these other countries that don't really have issues right now with the states, but they might in the future. That's a problem with threats. If you threaten to do something, that alone erodes confidence. And so what's happening now is confidence in the dollar monetary system is being eroded with each and every single threat. It doesn't even matter if they follow through or not. It doesn't matter. It doesn't matter when Trump threatens BRICS to cut them off SWIFT, like Biden did. That's the other thing that I learned with Marty is precedent. Biden set a precedent, a very important precedent, where you could cut off someone from the dollar system if we don't like you. He set that precedent, and now Trump, instead of saying that was a mistake, we're never doing that again, he's doubling down on that. He's saying, no, I'm going to do it to more countries. And so the rest of the world is freaking out and saying, we can't trust the Americans.
So you're talking
we
about
need
confidence
to
in the dollar system.
Confidence in the dollar system is eroding. And that's why Marty called it, his model is called economic confidence model. It's not about what happens. It's about the threats. In this case, it is about the perception of what might happen. And that oftentimes creates reality. That perception will create reality.
Sure.
We may well be headed for a dollar crisis because the world feared a dollar crisis.
Well, the reason it would create reality is because we act on what we perceive. It doesn't matter whether perception is accurate or not. The action and economic activity is human activity. And I said that as soon as they started locking us down in COVID, I wrote a blog post and published it on the Steem blockchain or Hive blockchain that's called Economic Activity is Human Activity. And you can't stop human activity, i.e. lock everyone in their house, without in lockstep affecting economic activity. It's the velocity of money again, right? So anyway, that ended up happening. But so you make some very good points there, right? I think most domestic Americans don't understand or have any perspective on how prosperous they are as individuals, right? The per capita prosperity for an American is like the highest in the world, specifically because the dollar was for a long ass time the world's reserve currency, the currency of financial markets, etc. That was a luxury that each American was afforded, right? And you're making the case, I think you're making perfect sense, that to not understand the infrastructure that keeps that alive, if you don't understand that and you start removing parts, you're threatening the American dream, the prosperity that every American's enjoyed for the last 50 years.
Agreed. At the same time, I think that Americans, from their perspective, they never voted on being a global empire. This is something their
but they still benefit from it.
They benefit and they don't. A lot of them lost their jobs to this global empire as the empire offshored jobs that were cheaper overseas. And so I think it's a story where by the way, the same thing happened with Rome. By the way, when Rome started growing as a global empire, this is what led to the fall of the Republic. I didn't think we would touch on this issue, but as Rome began to grow as a republic, became a global empire, even though it was still a republic. However, the fruits of that empire were only enjoyed by a certain the so-called 1%. Only the 1% actually increase their living standard and actually enjoy the fruits. By the way, this is in history books. This is now understood as being the case where poor Romans or working class Romans were not really better off as the empire began to grow, even though the wealth per capita was growing and the influence of the empire was spreading. However, Romans hated this system. They actually did not like it. And they voted against it, not because they couldn't vote, but they supported Caesar. Yeah, and Caesar was the one who gutted all this. And that's why Caesar was hated and he was murdered. He was murdered because he wanted to take money away from the elites and give it to people. One of the things he wanted to do is he wanted to have all of Italy being Roman citizens. That's one of the things. Italy, they had this system where you had to be at the very top to actually enjoy all of this prosperity. And I think that when you travel to America, you find the same thing. A lot of poverty that was not there before.
For sure.
Yeah, it's just off the charts. And so I think this is after long hours of reflection. I think the empire is just not working for most Americans, and they're voting against it. They don't want it.
That's very
now. Again, the process of reshaping how America deals with the rest of what its role is with regards to the rest of the world. As they reshape that, we're going to go for a major crisis, because that's what happens. Every time you start a process of healing or cleansing, it's painful at first. And yeah, I mean, we're all trading. We all want bull market and number go up. And so to bring it back to markets, we tend not to like that. And I think that a lot of analysts tend to go, oh, it's going to create a recession. Like, oh my God, we can't have a recession. Yeah, we can. I mean, if you want to go through this process, you're going to have to go through a recession. I mean, if you want to stop paying for Europe's defense, that's going to create all manner of chaos because Europe does not have its own defense. Now, I understand from America's perspective, they don't want that anymore. They don't want to do that anymore. And people have a right to vote. They have a right to vote. I mean, I've seen numbers that if instead of sending all that money to Ukraine, that was spent, within U.S. borders. I mean, they will have world-class infrastructure, which they don't. The roads in the States are horrible compared to Europe, and yet Europe is being subsidized in its defense by the United States, and so they look at this and say, no, we don't want that.
Well, that's why we can afford better roads.
Yeah. So they have bad roads, but they have to pay for Ukraine's defense because Russia wants to encroach on Eastern Europe.
But that explains German prosperity post World War II is because they saved a ton of money because they didn't have a military for a while there. They was able to invest in their economic infrastructure and then became one of the superpowers in Europe.
Not only that, Europe has high tariffs on all American goods, all of them.
Right.
So what Trump wants to do with tariffs is there's the economic argument that if Trump puts tariffs on European goods, that hurts the global economy. But then there's the moral argument that says, well, that's what Europe does. And so what Trump is doing is reciprocity. Now, again, he's dismantling. There's a deal here implicitly that was made between Europe and the United States post World War II, which was you're going to dollarize, you're going to have live in a dollar-based monetary system,
give me all the goods,
but you get to sell all of your goods to us. So it was okay for Germany to have tariffs on American imports, whereas it's not okay for America to restrict German imports. It's just not okay.
Right? So
yeah, that's okay. So that's the deal we had until now. Now Trump comes in and he represents most Americans and he says, no, that's not fair. We don't want that anymore. If you put tariffs on us, we're going to put tariffs on you, and that will dismantle one of those key pillars that kept the empire going as it was. I think what we're going to have now is something different. Now, maybe America and Americans one day decide, no, we want the empire. Let's take it, let's build it back. But right now they're saying, no, we don't want it. I'd be curious to see how they react once they begin to also feel the pain from all of that structure unwinding, because it hits America last, just like Rome. When there was a big crisis in Rome, some civil war or whatever, it hit Rome last. It wasn't felt at first. Then they begin to feel it, and that's when that's when we will know if America really wants to commit to being an empire or not. I view the post-World War period as de facto empire that nobody voted for and nobody wanted, and now they're saying, no, we don't want it. Now they're going to start to dismantle it, and maybe they decide in the next election or 2 or 3 elections from now, they decide, actually, we like the empire. Let's bring it back.
You said America feels it last. Do you know what came up in my mind is that's because they're sitting at the back of the roller coaster, right? So most of it's already going down the big dip. So they know it's falling and they're the last car to go down, right?
And I think if you look at markets, I think crypto is one of the first markets that feels the pain from that liquidity squeeze, because all of this translates into contracting global liquidity, and it hurts markets, and it hurts crypto first. So I think one of the questions with Perry was, how's the liquidity picture looking like? All of this discussion, Perry, by the way, relates to liquidity, but liquidity is not looking good. It's just not looking good. It was not looking good post-Trump. When Trump won, we had a big pump in crypto. Let's go to Bitcoin here for a second. Not that I don't love this discussion. I love it. So let's pick it right back up. But this was a non-liquidity induced pump. Liquidity was kind of neutral, and it was declining in Q4. But there's a 90-day lag roughly in liquidity. So if liquidity declines in Q4, you're going to have a soft Q1. So liquidity was contracting in Q1, but that was supposed to be felt starting in December. And look at it. It started to be felt in December. Liquidity now is stabilizing and picking back up slightly, though. That's the problem, slightly. And you know what has been missing all this time?
Go on.
The Fed. The Fed
the Fed's
has
good,
gone
sure.
from, the Fed was helping at first. They went neutral, totally neutral in 24, and now they're restricting liquidity again. And you can
So
see this
have you got
because
the
the only place where we might feel liquidity, this is part of a report that I wrote recently. The only place where you may have liquidity injections is the People's Bank of China and the Chinese. China is undergoing massive deflation right now. That actually helps keep inflation in check in the West, which is why I'm so sure tariffs are going to be inflationary. Because the only reason inflation is not a bigger problem is China is undergoing deflation. Otherwise, we would have inflation much higher than it is in the US and in Europe.
Hey, come
And
on,
the problem is,
bring up the US CBBS.
no, this is key. Hang on.
I got you
This
guys.
is
Sorry,
key. This is
thought you're
important.
done.
This is the dollar. So this is the price of dollar, the price of the yuan in dollars, right? Sorry, the other way around. The price of, no, I think I said it right. So 7.25, 7.25 yuan is $1. When this chart goes down, the yuan, the Chinese currency, is getting stronger.
Mm-hmm.
The only way the Chinese print if this price goes down, because if it goes up like it is now, I think the CCP has said 7.3, 7.35 is their pain threshold. With the yuan at 7.25, the Chinese hands are tied. They can't print. They need to print, but they can't because it causes inflation and it deteriorates. It crashes their currency, so they can't print. Meaning, we might see, Perry, to answer your question, one of the charts you can look at is the USD-CNY. If USD-CNY falls, then you might see China start to print again. If USD-CNY remains elevated, liquidity will remain restricted. And it all goes back to the Fed, really. I mean, unless they cut, the USD-CNY will be strong. So, and the Fed is not going to cut. My view is they may cut once, but that's it. They're not going to be cutting. So, yeah, liquidity is not as bad as it was in Q3 last year. It's picking back up, but this is why I said look for a rally. I don't know if it goes to a new all-time high, but it is a rally because liquidity is going to go for one final leg higher. But if you look at a chart of liquidity, which I might share later from Global Macro Investor, I don't think Raoul Pal will mind. They have these great liquidity charts, and it's just it's stabilizing at low levels now. It's not looking good, and it's not going to pick up because you just look around the world and you say, okay, who's going to? There's two entities that can inject liquidity that will drive these global markets: China and the States, and the two are intricate. It's just an eternal dance between China and the States, and China can't print unless the Fed cuts rates. The Fed doesn't want to cut rate because of tariffs. Therefore, China can't print, and therefore you have no liquidity. So you have restricted liquidity at the Fed, and that means the Chinese need to stay somewhat restrictive too, because China's a dollarized economy. It's a dollar-based economy. So if dollar rates are high, they can't really buck that trend. They can't go 180 degrees in the opposite direction and just print. They need the Fed to do so. Trump does not want to negotiate with China, I don't think, and so I don't think he cares what happens with China, and that's what you would need. You need some type of deal between the U.S. administration and the Chinese administration, and Trump doesn't like China, so I don't think he wants to help them in any way, shape, or form. If he does end up helping China, it's because whatever is happening with China is beginning to hurt America, and we're not there. We're not there yet. So whatever deal gets cut between these two nations, it won't happen soon because there's no need on the part of the United States to make a deal with China. China needs a deal, America doesn't, and so they're going to get no deal. That's my view, but I could be wrong there. I'm just speculating.
And the Fed's balance sheet continues to contract. That was the only other thing I was going to say.
Yeah, they're going to stop QT in June, which is why I said, okay, if they stop QT in June, the market may begin to price that in between April and June. They may, maybe prices rally between April and June in anticipation of dollar liquidity not being so bad. But that's not a crypto bull market. That's just basically an 80-day cycle rally or the final 320-day cycle rally as the 4-year cycle turns down. That's what it will look like. If you want alt season, if you want $200,000 Bitcoin, you need you need dollar liquidity to go up significantly. And the Fed has not changed their stance since
Mhm.
22, even though a lot of people called for that. They said, oh, it's this classic cycle. They're going to reverse policy. But in 24, it was clear. They understood that if dollar liquidity falls too hard, it crashes everything. So they can't afford to do that. But they also understood that they can't be too loose. And say they were threading the needle, and I think they did a pretty good job. The banking system did not crash. Uh, Dollar liquidity was not nosediving, but it was never accommodative. It was never accommodative. It was never 2020. It was never COVID. It was never post 2008. It was never that. Um, it was never that environment again. And to your point, Chris, I don't know if that's coming back. I think it might come back if we have a big crisis, and for a while, we might need, the liquidity spigots to be turned on again. We might see that, but it's not going to be this cycle. It's going
Why
to be
would they
next
do
cycle.
that?
That's
What
27,
would be the
28.
catalyst? Would it be what I
Big,
said earlier, which is
global
crashing the
financial
stock?
crisis. Global
And
financial crisis may cause the aggressive liquidity injections
what
by the
kind of
Fed.
financial crisis? Like liquidity crisis, dollar
Yeah,
shortage,
liquidity crisis. It
right?
keeps getting restricted and restricted and restricted. Trump,
And then asset prices
it,
would fall.
yeah, that's what I think. I mean, we're headed for a 4-year cycle high, and these are macro cycles. They're not just crypto cycles. So this year is the macro 4-year cycle top, and it's gonna be a bad one. I feel it's gonna be a pretty bad one because the way up was pretty crappy, and the way down is gonna
Mm,
be brutal. If it's this bad, it's not like some people think. Well, the bull market is not that strong, and then the bear market is not is weaker. No, no, no. I think
because
it's
the
gonna be
weight is still
bad.
there, pressing on the bull market. It's going to
Yes,
press the bear market just as hard
exactly,
without
exactly.
the
There are
strength
bearish
underneath.
forces. Yeah. So the bull market was battling bearish forces as
Downward
it went
pressure,
up.
exactly. Yeah.
Now when the cycle turns down, it's gonna be
Bang.
bad. It's
It's going
gonna
to,
be
yeah, the
really,
floor's going to hit.
really bad. I think it's maybe the first crypto cycle personally where I have no exposure.
Just
I
park. Yeah, totally.
Yeah, I'm in cash, whatever. Because what's gonna be working is the dollar. Because Trump is gonna make the
Mm-hmm.
dollar that much harder to get.
So
And
we just lend,
so
you just lend dollars in that environment.
yeah, I would lend, hedge, and yeah, there's a lot of things you can do for income. Farming, like farming. This is my favorite shitcoin to farm, CRV. It pays about 20% annualized. You can make anywhere between 1.5%, 2% a month. Yeah, it's great in a bear market, and you can hedge it too. So you can hedge the price of CRV. You can offload that
Oh, I
risk onto
see.
someone
Yes, I
else,
see what you're saying.
and so what you have is basically a dollar
A
position
dollar yield.
that pays, yeah, that pays yield,
Mm.
and you can even fix that yield. And I do it every month. What I do is I reset my dollar exposure to CRV, the notional, and I also kind of sell forward what I'm going to get that month because I know how
Oh, wow.
much CRV I can get.
You get
So I
paid up front.
fixed that pay up front.
Nice.
So I fixed the price in dollars too, so that intra-month volatility doesn't really hurt my strategy. At the end of the month, I reset everything again, and I keep
Mm,
having this decent 1.5%, 2% dollar yield, which is, I mean, it's a godsend in a bear market. This is kind of like the best you can hope for is
that's
to
cool.
not lose money. Maybe even make 20% on a portion of your assets, not all of them, a portion of them. I think it's a decent deal in the type of market we're heading for, but not there yet. I mean, again, I still think there's a rally left, but yeah, this is the rally where you sell, in my opinion. You sell into strength, and this is what I told the Y subscribers a couple of weeks ago. I said we need to change our mindset. We need to go from buy the dip to sell on strength, and so I think
Right.
that's I think what's going to work best here. Even if I'm wrong and it goes, to 200K, it's just not worth the risk at this point. It's just not looking
Yeah,
good.
but probabilistically speaking,
Not going to happen. It's
highly
very
unlikely.
unlikely unless
Highly
I don't
unlikely.
know something happen. You need at this point. This is where fundamentals and technicals and cycle analysis they intertwine
Mm,
because at this point, if you want to see a strong 320-day cycle rally, you need to see something fundamental change with the
on a
liquidity
macro
picture
level. Yeah.
on a macro level. You're gonna see something change. You will know something has changed. That's why I was kind of bullish in March
That's
2020
why I
is
made my
because
point about
they're
government
printing
debt
money.
reversing, but then you was like, I don't think it'll happen. You know,
No, it's too hard to do. It might happen as a combination between paying off the debt and high inflation, and maybe a combination of high growth, high inflation, and the U.S. deficit. Basically, government spending being kept on check. But it's gonna be super chaotic, and it will involve some sort of inflation will be part of that mix. So you may be going into a period of high growth, high inflation, and low government spending, or rather, it's being kept in check. You still have a deficit, but it's being offset by inflation and growth. So nominal growth, what's known as nominal growth.
Mm.
You may be going into a period of high nominal growth. One of the things that Trump is doing that I think is a positive is he's pursuing that high nominal. I don't think he wants inflation. He's gonna get it, but he's gonna get growth too. Uh, if he's allowed to do what he wants to do. When Liz Truss wanted to do this in the UK, she was cast out. Basically, she was going to pursue high growth, high inflation policies, so high nominal growth. That is basically, other than default, the only way to really get rid of the national debt. And she was thrown out. And now I don't even know who's PM at the UK anymore. But hey, you threw out the one person who had a plan.
yes, Starmer.
And so I'm guessing the people who are in charge now have no plan. They just want to keep business as usual.
They're just basically cannibalizing us internally. So they're raising tax rates rather than growing the economy. So capital gains tax has gone up. Corporation
They're
tax
raising
has gone up.
taxes.
Pardon me?
They're raising taxes.
Yes, and they're reducing the tax-free thresholds. So you used to be able to make £12,500 a year in capital gains. So the first £12,500 a year that you made in capital gains was tax-free. They've completely almost wiped that out entirely, and they've put the rate up as well.
Right. So again, a bunch of stupid people with no clue what to do. And so, yeah, I mean, that's how, my view is that the Roman Empire did not end when Rome fell, because it was the Eastern Empire. And that went on for another 1,000 years. And I studied the history also of how.
It had another name, though, didn't it?
Byzantine Empire. But that's not how they saw themselves. Right. Official language was Greek, and they were Roman. They thought of themselves as Roman. This is not looking back. And it has a lot to do. It has a lot to do with the fact that in the Middle Ages, the people who occupied Rome, the church especially, they saw themselves as the true Romans. Everybody wanted to be Rome. Everybody claimed to be the new Rome. And so even though the actual Roman Empire was in the East, Western Europeans did not want to admit to that. So they changed the name and said, no, that's Byzantine, but that's not Rome. But it was Rome. It was the same structure. They went Christian, but other than that, it was Rome. And it actually fell 1,000 years later. It just vanished slowly, due to entropy, corruption, entropy. Yeah, is entropy or entropy? Yeah, it was just corruption. Emperors not caring what happens outside of their own borders, and those borders started shrinking and shrinking and shrinking. They started losing more and more territory. By the end, it was like a very small piece of what was once a great empire, and it was really tiny. And they could have defeated. It was this crazy story. They could have defeated the Turks, who were just trying to invade and occupy Constantinople, and they didn't. The emperor pulled back the army because they lost faith, because they thought the general had political ambitions and wanted to become the new emperor. So they pulled back the army. And then the Turks come in and they kill everybody. Incredible. They died out of 1,000 self-inflicted wounds. This is what you always need to watch out for with great nations. I think that's happening with the UK is the slow collapse due to entropy of what was once a global empire.
Oh, yeah, we're like further down the empire track. Yeah, for sure.
Yeah, and so they just fade out of corruption, not care. It's just not caring, which is why I thought Musk was so great when he said, what we need now is, I think he said transparency and caring. He said caring, that word. So yeah, you have to care. You can't just be like,
care.
You have
if everyone
to
just loses the will to live, that's the end of it, right?
Yeah, and so again, I don't think the U.S. is done. I disagree with Marty on that. He says he thinks it's done. China will rise as a new global empire. I don't agree. I think it's the U.S. will reinvent itself. I don't know if it'll be a global empire or it's just regional. It controls the Americas, has strong ties to Europe, and that's it. But it will be a new renaissance for
Have
the
you not
U.S. I
read
think the
Ray
future
Dalio
is.
though?
He
The
says the
changing
same thing.
changing world order. No, he doesn't. He says that the cycle, the empire cycle, right? Because
Yeah.
he's gone back 5,000 years. He's saying the USA is nearing its endpoint and it's at the crossing point where China rises.
Yeah, a lot of people say that. Where I disagree is that Rome lasted for about 2,000 years. Republic, uh, Western Eastern Empire, then the Eastern Empire. It's about 2,000 years. And so the whole 250 is, I don't want to get too deep into the astro side of things. You guys know that the forecasts that I do are based on geocosmic cycles. The Pluto cycle is the so-called revolutionary cycle, 250 years. In other words, there's a 250-year cycle. But some empires last for multiple of those. They go on for 5 or 1,000 years. So they go on through these major 250-year phases, but they don't fade away. They stay. They remain. And Rome was one such case. Rome, when Caesar and the fall of the Republic is kind of what's happening now with Trump. It's very similar. If you study the history, very similar. Rome went for what's known as pretty much a golden age, another 250 years of a golden age after the Republic was basically gutted, and they replaced it with it was a de facto empire with an emperor, but it wasn't really. It was still called president. Back then, it was called the Council of Rome, right? It was the Council of Rome. So the Roman emperor was not the Roman emperor; it was the Council of Rome. And so the U.S. may turn into an actual empire with an actual emperor. We're still going to call him president, and we're still going to have elections every 4 years, and we're still going to have a Senate, Congress. It's just going to be they're going to have a lot less power, and it will be a de facto king, because Rome, like the states, Rome hated kings. They didn't want kings. The whole reason why the Republic was created was to get rid, because they used to have kings. I don't know. I think, David, it seems like you know more about Rome than I do. They used to have kings. Then they got rid of them. They created the Republic. And for 250 years, that Republic hated the very notion that somebody would sit at the throne.
Yeah.
Yeah. However, it became an empire with an emperor, even though that's not what they called it, because that was a bad name. And I've seen some suggestions since the Obama years that the United States, that the presidency is accumulating more and more power, the rule by executive order, all of that stuff.
Yeah, evident from Trump is because that's what I've noticed. There's always like an increasing use of extremism, and executive orders are meant to be these one-off things, and now he's just whacking them out willy-nilly. I'm like,
yeah,
it's getting out of hand.
He's getting rid of he is consolidating power within the office of the presidency.
Right.
And interestingly enough, because people keep saying Hitler a dictator, and I always think, no, you have to go back further. You have to go back to Rome and the problems they had with their republic. And the problem is, when you have a republic and nobody's in charge, and again, I'm just saying this as an analyst. The problem with the republic is nobody was in charge. Nobody really had took responsibility for what was happening, because it was so diluted, the power base. It was in the Senate. And the Senate, they were just out for themselves. They didn't really, the buck stopped at no one. Nobody was the face of what was happening. So the big problems, nobody to solve them. You can kind of see that with Congress and the Senate today. It's like, oh, it's not my fault. It's the other guy's fault. It's not our fault. Whereas when you have an emperor, when you have a central figure, the buck stops with that person. That's why we still have CEOs at companies. We don't do Senate. we don't do rule by committee. We have a single person. The buck stops with them. We charge them to fix the issues. And Rome kind of eventually went back to them. They still had a Senate, and I don't remember exactly. They had a Senate would pass the laws. The Senate had a lot of power. Senators were powerful even during the empire years. They didn't actually get rid of it. But eventually they found that, okay, we need someone to be the figurehead and the guy who's responsible for what's happening, and it's their fault if something doesn't work, and that person is incentivized to do something about it.
Otherwise,
And so too much decentralization, I think, is what happened with the Roman Republic, where
too
nobody
much
would fix the issues.
decentralization. Hmm.
You can have too much decentralization because
For the
nobody's
reason
in
you say,
charge.
though, for the exact reason you say, is that everyone's passing the buck and no one takes responsibility.
Look at
Therefore, nothing
Ethereum.
happens.
Look at Ethereum.
Sure,
Ethereum Foundation. Ethereum
sure.
has existential problems and nobody wants to fix them because nobody can.
Including with Vitalik now, right? By the looks of things.
Including
He's
Vitalik.
like,
Everybody.
hey, come look at me.
Yeah, it's decentralized. It's like, okay, I mean, and listen, if it's Bitcoin, great, because it's money and you need decentralized, neutral, unchangeable money. Great. But Ethereum is kind of like a world computer with a lot of competition.
A lot of competition.
More
that's
like
what I
a
was gonna say.
company. It's more like a company than money. It's more like a company
Bitcoin,
than
yeah,
gold.
sure, sure,
Yeah, right.
sure.
So you need innovation, you need to change, you need to adapt. And there's nobody there to do it. There's nobody there to push that change. There's a lot of, even when they upgraded to proof of stake, I remember, I don't know how many papers are read on what the actual proof of stake would be like because there were so many different suggestions. And so Ethereum kind of suffers from, ironically, a lack of centralization where no one is saying, okay, this is the consensus mechanism.
This is the vision.
This is the vision. This is how we scale. This is how we grow going forward. And I think what's going to happen with Ethereum, because I'm super bullish on Ethereum, is that I think that eventually somebody, it looks like Vitalik may end up being that person who says, okay, here's what we all need to do. I say Vitalik because I think he's the only one who can rally the troops, get enough support to push this thing to where it needs to be. And going back to the States, I think more centralization and the figure of the presidency, the office of the president, may be a good thing. Now, all systems fail, and the Roman Empire was not perfect. There's a lot of corruption. Eventually, emperors were corrupt. However, within our lifetimes, they end up making some major reform, whereas the way the countries govern changes, the way the empire is governed changes. It's going to be a good thing for all of us alive here. Is going to be a new golden age. That's I don't think the U.S. is done. I think the system is just too good. It won't break so easily. It'll take multiple 250-year cycles to completely erode that nation. I think. I could be wrong, but I always disagree with these. Even Marty or Ray Dalio, who's it's about to change, but it doesn't change that often. Actually, just look at history; it doesn't actually change that often. Sometimes it does, like with the UK, it was I think it was a single 250 cycle. Sometimes it goes on for multiple cycles. It's like markets themselves. Sometimes 320-day cycle is 60 months. Usually it's 320 days. Usually, yeah, exactly. There's variation within macro and historic cycles too. I mean, it's not always the same. There's a pattern, but you also need to be aware of how that pattern changes. Like looking at Ethereum here, it looks like this is a double top to a 4-year cycle that makes a lower high to the previous 4-year cycle. Can that happen? Sure. I mean, why not? It can happen. You can't say that every 4-year cycle will bring new all-time highs. That's only been true of Bitcoin and no other crypto asset.
And like you said earlier, that's still not immune to larger macroeconomic forces.
If the macro sucks, I think it makes sense to say that the crypto cycle will suck too. Actually, we're seeing it now. Crypto cycle has been
exists
horrible.
within that system, right?
Yeah. And I think as a macro analyst, you have to be aware, as a crypto cycle analyst, you have to be aware of the larger macro cycles that crypto's part of. It's not immune to this. This is the problem that I've had, even though I do recommend reading Raoul Pal and all these people. They do great work. The problem, I think, is they project the past into the future every single time. They have a cyclical mindset, but they think every 4-year cycle is going to be the same. No, not every 4-year cycle is the same. You can clearly see that macro cycles have been playing out the way they have since 2008. Right. It changed in 2021 and 22, actually. It clearly something changed because we have inflation. and we didn't have inflation before. That's what we can point to, inflation. They went too far, and now they want to rein in the experiment. You don't think the people at the Fed realize that printing too much money could cause inflation? I think Jay Powell is especially aware. So I think in his mind, here it is. I think that's how he sees it. Okay, we didn't have inflation for like 12 years, but now we do. So now we need to change the way we do monetary policy because inflation is now a thing. And it just took 12 years. You know, when they said, oh, we can print money, it doesn't create inflation. Yeah, transient. The way I see that is, no, it just took 12 years. It just took 12 years. Just think of
That's
it.
funny, man.
Think of it from the perspective of somebody who's reading this, in 21, 25. They're going to read, they started printing money in 2008, and by 2020, we had a lot of inflation.
That's in the book in the future, looking back.
Yeah, book in the future.
That's funny, man.
They got to read a lot of history, and it usually is, oh, this emperor only, and after a decade, it's nothing because it happened.
In the book. After a decade.
That's one line in the book. But for us, 10 years is a long time.
Sure,
and so, all right, let's get back to this because I got to go in 15.
Sorry,
so maybe the major macro change, says Perry, will be the strategic Bitcoin reserve for the US actually happening, creating a massive investment in Bitcoin again. As a catalyst, Perry, I think the whole strategic Bitcoin reserve is done. I didn't think it was such a big catalyst, but here's my understanding. Chris, maybe you have different comments, but my understanding is that needs an act of Congress. You're not going to get it. You need to get it for the strategic Bitcoin reserve to be a catalyst in this cycle. You need to get something between now and June. I think Trump has bigger priorities. It turns out it's not so easy to do. I think that's what they found out. It's not so easy to do. And you're not going to get it. Maybe a catalyst for the next cycle, but not a catalyst for this cycle. Although I will say, Perry, I do think there's a rally coming, and it's going to be significant. It may get a lot of people calling for, you're going to hear Raoul Pal saying, here we go, bananas. It's not going to be that, though. And maybe news around the Bitcoin reserve. I don't know. And any comments on the huge institutional crypto price average, the ETF? I've commented on the ETFs before. It's not it's a nothing burger, in my opinion, as a catalyst beyond what it already has done, which is it created a great Q1 24 rally. Other than that, it's just a way to accumulate crypto. It enables bigger players to come into the crypto space. However, crypto is now what, like a $2-3 trillion asset now. Guess what? If you want to go from 2 trillion to 10 trillion, you need institutions. And so the fact that ETFs and big institutions are coming into crypto now means we may continue to enjoy future great 4-year cycles in crypto, because honestly, retail can only push it so far. And I think retail's role as a leader in this market ended in 2021. And every future 4-year cycle is going to be driven by big players and institutions and professionals. And you need those because they have more money and they can push this asset to, tens of trillions of dollars, which I do think is the future of crypto, tens of trillions of dollars in market cap. However, as the profile of your average crypto investor changes, I think the cycle changes. The 4-year cycle changes. These guys, they cash out. They double their money, they cash out. We are seeing that look at Ethereum, and it clearly tops out every time it goes to 4,000. Clearly, all of these ETF buyers, all these people, if they buy at 2,000 and it goes to 4,000 within a few months, they sell. So the character of that 4-year cycle changes. Crypto is less prone now to parabolic blow of tops, because a parabolic boom, what that requires is people who are crazy enough to buy something that's already at 5x, they buy it and because they want to double their money. And that's what you need to push it to 10x. You need that mania mentality to set in. And guess what? Professionals like ourselves here were much less likely to do that. I never buy after a breakout. I never buy during a parabolic never. I just sit back and watch my gains. But I am painfully aware of the fact that I need someone to come in and keep pushing that price higher so I can sell on to those suckers. But if everybody involved in crypto is professional, most liquidity is professional liquidity, you're much less likely to have
Well, the
parabolic
volatility will
moves.
be lower, right?
Exactly. Volatility will be lower. I think also you may have less pronounced bear markets also because these guys are bottom fishers. They're gonna buy on the way down. Like me, I mean, just I buy them most at the low. I tend to build my position during that first year, and in fact, I tend to build what is it? This is Bitcoin. So I built most of my Bitcoin allocation. By March or February 23, I had most of my allocation, and then I added a bunch more in October. That was it. I did not add any more Bitcoin after October 2023. So who's going to push it to 250,000? Well, it's not going to be me. I'm out of the market. So you need those retail people, and I think meme coins played a part in this. That retail just gravitated toward meme coins, and they left the big names. They don't play here anymore. Professionals play in this market, so it's a trader's market now. In fact, the best comment I heard at this Real Vision conference was they said, and it was fascinating because everybody was banana zone. They had people dressed up in banana costumes dancing, which was pathetic. And I thought, yeah, that's the sign of a top.
That's a top signal.
If that's not the sign of a top, I don't know what is. There's a reason they say party like it's 1999. I was a kid then. It's clear though that people were having a great time, and people have a great time at the top, not at the bottom. So I thought people dressed in banana costumes means we're at the top, and that was actually the top. So a few weeks prior. So, but what was fascinating to me is that even though, let's put it this way, officially everybody was upbeat and bullish. In private, though, I attended some private meetings, VIP meetings, whatever. Everybody was concerned. Everybody was concerned. And the best comment I heard, and these are like actual pros. I mean, these are all high net worth, like all of them. And because they would talk about how many millions they had in this shitcoin or that shitcoin. You got to read. I figured if someone has $40 million in some shitcoin, they have hundreds of millions at least. And so high net worth, very professional, smart. And they were saying, best comment, I wanted to write it down. I wanted to get my phone and write it down because I said, okay, this is it. They said it's going to be a trader's heaven and investor's hell. That's what they said about crypto from now on. A trader's heaven and investor's hell. Luckily for all of us here, cycles are great for this. If you follow the cycles, all you need, this is what I realized over the past few years as I was recording, especially as I recorded the course, because it forced me to go through everything and explain it. And I realized, all I need is I just need volatility. I don't even care if it goes.
Exactly.
I just need volatility. If this thing goes down to 20K, I'm super happy. I'm cashing out at 95. I'm buying it again at 30. It goes to 80. That's great. I mean, I don't need 200K Bitcoin. Only an investor, only a buy and hold investor needs 200K Bitcoin. I think it is my view that you're going to have to trade this thing if you want to squeeze more out of it. I think the buy and hold investor will also make money in crypto going forward, a lot less though. And I don't think it's true anymore that you just buy it and forget it. It's like when Raul Pals, don't fuck this up, just buy it and hold it. No, that's not going to work. That is not going to work. Maybe it works on Bitcoin. It will work on nothing else unless you're super early and you get super lucky. But the days of throwing spaghetti at the wall or throwing a dart at the board and making money, I don't know. I mean, this view was shared at this table. It was at the end of the conference. It was the last day, and 5 people were all they were worried. You could clearly see they're not as upbeat as I thought initially. So I think everybody recognized that something has changed. This is a different cycle, and I blame the ETFs, I blame the futures, I blame Wall Street, I blame all these pros. This is what happens when professionals get involved. The market is the easy money goes away, and it's no longer so easy. You're no longer trading as idiots. I mean, I'm sorry to say, But Bitcoin in 2017, it was a bunch of people who just didn't know anything. For them, it was just buy the pump every single time, buy the breakout, ride it. These guys would buy in when the thing was already up, 200% in 2 weeks, and they would come in like, oh, buy it now. And I'm like, what? You don't buy a market that's up 200%. These guys do. And so I learned that I had to relearn how cycles work in crypto. And now I think what's happening is, oh, now it's like the stock market.
It's
It's
reversed.
like trading gold. Now it's a lot like trading gold, which, by the way, cycle model was great on gold. And Bitcoin looks a lot like gold. So trade it accordingly. Anyways,
I've got a bail.
yeah, I need to bail. But Chris, okay, hang on. Let me answer this, Chris. I'll leave you the final comments.
Okay.
So can you summarize in a nutshell how we could view the high and low numbers in your model for the next month or two? Perry, I'm assuming you're talking about the forecasting model. It sounds like you are saying don't sell anything now because BTC is a bit oversold. Yes, I am saying that. The model shows 227 as a noteworthy, probably more so a low, because we can have a bit of a mini rally soon, maybe until the couple of high readings on March 20 and 20. Perry, spot on. My view, to summarize, and this could be completely wrong, so let's stay and let's continue this conversation in chat. But my view, long story short, is this week or at the latest next week will produce an 80-day cycle low. I think you're looking at this low now, and Ethereum is, I think it's Solana here looks like we have a low in place, and it's not confirmed. Obviously, I would use the trusty 20-day FLD. I love this one. When this line is crossed, with the market this oversold, when that line is crossed, you have your 80-day cycle low. 9 times out of 10. I'm just pulling those numbers out of the hat. I don't know if that's the truth, but yeah, usually when that 20-day FLD is crossed, you have your 80-day cycle low in this context, in the context of a market that is already very oversold. Once you have that low, like you said, Perry, it tops out in March. What you have is a left translated cycle. You have an 80-day cycle rally that lasts only 1. It may be a short cycle though, usually around changes of trend. I think I taught that in lesson 7. You have very short 30, 40-day, 80-day cycles. And so the view is we bottom out now, we top out in late March. Like you said, Perry, there's a high likelihood for a high in late March. So we top out in late March. We head down for I would say it may be a dramatic low in April, dramatic low. And from that dramatic low on, the market builds momentum again into a high in June, but possibly in October. You ask me, it's going to be in June. It's going to look something like this. This is not the final low in this correction. I don't think. We have a rally left. I would unload risk into that rally. I would not wait for an April low, and I would definitely not hold significant risk in this market looking for this April to June rally. I would not do that. You can always buy again. In fact, let's just stay with the model basics here. Let's say this is what we have. We have an 80-day cycle low in March. We have an 80-day cycle high in March. We have an 80-day cycle high in January. You can draw the VTL right there. And let's say it plays out exactly like you're seeing here. You would be shocked at how often this is exactly how it happens, which is why the strategy for me, this is me. I sell now. I'm already in cash. I will sell whatever I haven't sold already on this high here in March. I don't care about this. I don't want to have exposure while this is taking place because it could be lower, it could cross, it could be far more bearish than you thought. So it's better to be in cash. And listen, you buy it here and then you buy here on this VTL right here. You buy it in May, you buy it 90K, 85K, whatever, and then it goes to 110. You actually have you squeeze more out of that rally by trading. I know it's horrible when people advise trading because trading is super hard, but for those of us here, we can trade this. Just trade the AVT, just draw the VTL, trade that VTL. There's a reason I hedged when it crossed the VTL is because look what happened afterwards. Look at Solana after it crosses the VTL. I haven't drawn that one. Look at what it does. This is when the VTL, I don't know if it was exactly here, but this is what Solana, yeah, it was already falling, right? But okay, whatever. But then it crosses the VTL and then it keeps falling. It keeps falling, and Bitcoin crosses the VTL, and Bitcoin has done this wonderful thing for us in this cycle, which is that the VTL is crossed very early, very early. 97,000 is the first closing below the 97,000, with the top basically being 100K. This is what I told Brett back in November. He wanted to cash out at 95, 97, and I said, Brett, in this market, I don't know if Brett's here, I don't think he is, but I said, Brett, in this market, you can probably sell, if that's the top, if 97, 100K is the top, you're going to be able to stick to the rules of this cycle model and sell at around that price. That's what happened. You're basically selling the top. And the top is, the actual intraday top is January 20th, and within 2 weeks, you're selling. And so you don't need to, there you go. So you don't need to guess so much. You can just say, okay, I'll wait for that VTL to be crossed, which is why personally, in late January, I was very pleased because we had a VTL that was very close to price action. So I thought, okay, I'll be able to cash out early. And after I cash out, I don't care anymore. I just don't care what it does. Strong low on April 7th. Yeah. So around that time, I would expect. I don't know what that looks like, Perry, because there's not enough time. There's a high March 20. There's a low on April 7. It could be the high is not March 27. The high is March 10. You can't speculate too much. This is the pattern that I'm watching: an 80-day cycle rally, a new low, a slow buildup of momentum, and then a decent rally. And by the way, that's what happened here. That's what happened in 2024. That's what happened in 2023. What happens every single time. So with that, I am done. Chris, final thoughts, and then I'll wrap up.
Can't improve on that. I'll leave that hanging. That was spot on.
All right. So with that, guys, thanks for joining. It was an awesome session. Super fun conversation. Stop sharing here. And see you all in chat. See you in the next one. Probably going to be in about a month from now. It's going to be in late March. I want to give it a good month so we actually have something to talk about. By then, we should have seen this rally. But let's stay in touch in chat because we're going to see this rally very soon, I think. All right. Cheers, everybody.